If you have $1,000 to invest in 2026 and you're not sure where to start, this video is for you. Today, I'll walk you through the smartest beginner-friendly ways to invest $1,000, even if you've never invested before, you don't understand the stock market, or you're afraid of losing money. I'll show you what to invest in, why it works, and how much you could realistically make over time. So if you want your money to grow safely and consistently, stay until the end, because the last strategy is a game changer. Before investing any money, you need the right mindset, because investing in 2026 is different from investing 5 or 10 years ago. Here's what beginners must understand. 1. Investing is not gambling. You're not trying to get rich quick. You're trying to make your money work for you, slowly and consistently. 2. You don't need to be an expert. With modern investment apps, anyone can start with a few clicks. 3. Time in the market beats timing the market. Trying to predict the perfect moment is impossible. Investing gradually always wins in the long run. If you understand this, you're already ahead of most beginners. Before you invest $1,000, you need to protect yourself. Put $100 to $300 into a high-yield savings account or an emergency fund. Why? Because if something unexpected happens, a bill, a medical cost, a repair, you won't be forced to sell your investments at the wrong time. This safety net gives you freedom and confidence to invest the rest. Index funds are the best investment for beginners. They're safe, diversified, and stable. With $1,000 in 2026, the best fund for beginners is the S&P 500 Index Fund. Why? Because it includes the 500 biggest companies in the US, companies like Apple, Google, Microsoft, Amazon, Tesla. Historically, the S&P 500 has returned 7% to 10% per year on average. How much money could this grow to? If you invest $1,000 and add $50 per month for 10 years, you could have $9,000 to $12,000. If you invest $1,000 and add $100 per month for 10 years, you could have $18,000 to $24,000. This is why almost every financial expert recommends index funds. How to invest? Use apps like Fidelity, Vanguard, Charles Schwab, Robinhood, or Webull. Search for VOO or SPY. Buy it and hold long-term. Don't touch it. This strategy alone could build you wealth over time. If you want more growth, you can invest a portion of your $1,000 in sector ETFs. These ETFs focus on fast-growing industries. Top ETFs for 2026: QQQ, tech companies like Apple, Amazon, Nvidia; SMH, semiconductor companies; RKK, innovation, AI, robotics; SeedBR, cybersecurity companies. Potential returns: these ETFs can grow 20% to 40% per year in strong markets. How to split your money? If you want a balanced beginner portfolio, $600 S&P 500 Index Fund, $200 QQQ, $100 SMH, $100 CIBR. This gives you long-term safety plus high growth. You don't need $1,000 to buy a single stock anymore. Fractional shares allow you to invest $5, $10, $20 in big companies like Amazon, Tesla, Apple, Microsoft, Nvidia. This is the easiest way for beginners to build confidence and learn the market. If you want safety, US Treasury bills are one of the safest investments in America. Why people like them? Almost zero risk. Return around 4% to 5% per year. You get your money back in a fixed time. How to invest? Use treasurydirect.gov or invest through Vanguard, Fidelity, Robinhood. These are perfect if you don't like risk or want stable passive income. One of the best investments you can make with $1,000 is investing in knowledge and skills. For example, online courses, certifications, learning digital skills, starting a small side business, improving your career skills. A course that costs $100 can help you earn $1,000 every month. Nothing grows faster than knowledge. Here's a simple beginner-friendly plan: $300 safety fund, $500 S&P 500 Index Fund, $100 QQQ ETF, $50 fractional shares, $50 learning skills. If you want more growth, $700 ETFs, $200 tech stocks, $100 treasury bills. These allocations are beginner-friendly and safe. Let's assume you invest $1,000 and add. If you add $25 per month, you could end up with $4,000 to $6,000 in 10 years. If you add $50 per month, you could end up with $9,000 to $12,000. If you add $100 per month, you could end up with $18,000 to $24,000. This is the power of compounding. Avoid these common mistakes. Crossmark trying to get rich overnight. Crossmark putting all your money in one stock. Crossmark investing without an emergency fund. Crossmark panic selling when prices fall. Crossmark following random advice from strangers online. Crossmark buying cryptocurrencies without research. Investing is a marathon, not a sprint. So that's exactly how to invest $1,000 in 2026, even if you're a complete beginner. If you follow the strategies in this video, index funds, ETFs, fractional shares, safe treasury bills, and investing in yourself, your money can grow consistently for years. If you want more beginner-friendly investment videos, let me know in the comments and subscribe for more content like this. Thanks for watching, and see you. Investing your very first $1,000 in 2026 can truly be the starting point of an entirely different and much brighter financial future that you might have ever imagined for yourself. Let's examine a real-world example that clearly illustrates just how powerful consistency can be, even when you're only investing relatively small amounts on a regular basis. For instance, if you commit to investing just $50 per month consistently for a full 10 years, assuming a solid 10% annual return, you could potentially grow that into more than $10,000, showcasing the remarkable effects of compounding over time. This simple calculation demonstrates the truly incredible power of consistent and disciplined investing practice steadily over an extended period of time. Now, it's important to discuss what you should absolutely never do with your first $1,000, especially as a complete beginner stepping into the world of investing. First and foremost, avoid the temptation of investing your entire amount into highly volatile assets like cryptocurrency, particularly if you lack a proper understanding of how they work and their inherent risks. Similarly, do not blindly follow random advice from TikTok videos or Instagram posts without conducting your own thorough research and due diligence first. Picking individual stocks without extensive research and analysis is one of the most common pitfalls that traps many new investors right from the beginning. Always beware of those enticing get-rich-quick promises you see everywhere. Remember that true wealth building requires significant time, patience, and a steady approach. Finally, resist the urge to put all your hard-earned money into high-risk investments immediately, as this can lead to substantial losses early on. As a beginner investor, sticking to simple, proven, and safe strategies will always provide the best and most reliable path towards sustainable financial growth. Let's now dive into a straightforward yet highly effective investment plan tailored specifically for 2026 using your first $1,000. Start by allocating $500 to a low-cost S&P 500 ETF, which offers you broad and diversified exposure to the overall U.S. stock market's performance. Next, place $300 into a high-yield savings account, allowing it to earn interest while building a secure emergency fund for unexpected needs. Then, invest the remaining $200 into a dividend ETF, which will begin generating regular income payments that you can reinvest or use as needed. Additionally, make a firm commitment to contribute $50 every single month to these investments, which will significantly accelerate the power of compounding in your favor. Following this plan, your emergency fund in the high-yield savings account will grow safely with accrued interest, always providing a reliable financial cushion when life happens. At the same time, those dividend payments from your ETF will start rolling in regularly, establishing a valuable passive income stream right from the early stages. Meanwhile, the S&P 500 portion of your portfolio will grow steadily along with the broader U.S. market, capitalizing on overall economic expansion and corporate earnings. Your ongoing monthly contributions of $50 will further accelerate the compounding effect, making your money work even harder and more efficiently for you over time. Year after year, by faithfully following this balanced approach, you'll steadily build a solid, resilient, and continuously growing financial foundation for your future. To wrap up, let's identify and discuss some of the most common beginner mistakes that unfortunately hold many people back from achieving their true financial goals. One big mistake is constantly comparing yourself to seasoned investors who have years of experience and larger portfolios, which can be discouraging and entirely counterproductive to your progress. Another error is expecting fast or overnight results. But investing is fundamentally a marathon that rewards patience and endurance, not a short sprint. Frequently switching strategies in response to short-term market fluctuations can seriously undermine your carefully laid long-term investment plan. Making investment decisions based primarily on emotions like fear or greed, rather than sound logic and research, often leads to regrettable and poor outcomes. Failing to establish an emergency fund before diving into investing can jeopardize your overall financial stability during unexpected challenges. By consciously avoiding these common beginner mistakes, you'll position yourself well ahead of most others who are just starting their investment journey. Ultimately, investing your first $1,000 in 2026 might just be the pivotal beginning of a completely different and far more prosperous financial future for you. Remember, you don't need to be wealthy or have a large sum to start your investing journey, but you absolutely do need to take that first step to eventually become wealthy. The key is to stay consistent with your efforts, faithfully follow the outlined plan, and trust in the process for achieving long-term financial success. If you found this video helpful and informative, please make sure to give it a thumbs up and subscribe to the channel for more valuable investing content like this. We'd love to hear from you. Comment below and share. How would you invest your first $1,000 in 2026? Your thoughts could inspire others. Thanks for watching, and I'll see you in the next video where we'll cover even more tips for your financial success.